understand that.
Do you have a macro view? I mean, I know it's value driven, which means largely you'll try to filter out the noise and you try to sort of zone in on more of the fundamentals. But surely as a family office, you must have a macro view of where things are right now. And the themes right now clearly, again, are like not just, well, it used to be, is China uninvestable? Now the question is US investable? And mainstream media is trying to put a positive spin on it, but most European allocators I've been talking to have been slowly taking chips off the table, especially now with increasing this new mandate. Like take Germany, for example, they were raising $500 billion for infrastructure spending. That's driving a lot of capital back towards Europe. You know, some of that's coming back here to Asia. I guess what's your house macro view? And more importantly, what's your personal macro view?
Oh, well, look, we just family office turned asset manager, so we can't really say we have a house view or anything. But then it is for sure, given the background of Ronald's family, and then myself and some of our senior staff as well, we are by definition very constructive about Hong Kong, about China, about Asia, right? That's, you can say that is a bias. You can say that that's just how we were structured.
Let's talk about the fundamentals. Like what's constructive about this region?
No, I think,
in fact, that's a really good question because often when we talk about what's cheap, last year, the angle of investing into China and Hong Kong is fantastic valuations. But one of the challenges that we had was, well, what's the long-term fundamental driver? You have a declining demographics, you have still a debt issue here, and you still have untapped massive household savings. In China is roughly $20 trillion. So what's constructive?
Probably I offer my personal view because I think each one of us have slightly a different twist to that, even though everybody is still very constructive long term. For me, I think it is really the time for people to start to look at China differently. A lot of the challenges that, especially for the global allocators that they are now facing, as in trying to figure out whether we should put money back into China or not, is that they're still using the mindset of the past. And that past, actually, dating myself, but for me, that was actually a few past already for China, right? I happened to start tracking China since the early 90s. And I always joke with people is that if you treat Beijing as a fund manager, what I've seen is that they have 30 years of, rock solid track record. Every time when there's a crisis, they solve it. Every time at the crisis, people say, look, this is the end. How can they solve this, right? From the hyperinflation to NPLs to in the recent years, a lot of the ideology changes and things like that. And you know what? I mean, they just solve it, right? So
Kyle Bass, he's been shorting Hong Kong and China for like the last 2 decades.
It's okay. We have seen so many of those managers over the last 3 decades, honestly. Nothing I can say. And again, at a certain point in time, if they get the timing right, they should make a little bit of money because every time there is a little bit of a volatility. But just going back to my own little view about China, I think, number one, we should really adjust our mindset as in, I invest in China because high growth opportunities, right? And I always ask people, what's wrong with China growing 3 to 4%? Even the US don't have that. And then you look into the US and why people are so positive about the US because you are actually no longer looking at just the headlines and the top line. The economy is so developed that there's so many different sort of sectors, opportunities, development.
It's a very deep bench.
Exactly. I mean, if you keep on investing in autos in the US, I don't know where you ended up now. Right.
But you can say that for 90% of the S&P, for example. Right?
Especially
the last 5 years, it's all been bifurcated and concentrated in Mag 7.
And that's the thing about the advantage of having very developed financial markets. And I think that's, in fact, I was having this conversation with a colleague the other day, going back to Hong Kong. I think Hong Kong, at least we should take the initiative to push for a more representative index for China. What is HSI, right? HSI is now really neither here nor there. It's not really Hong Kong and it's not really China. And what is it? If we get our act together, and then of course, I think Hong Kong has that experience, and I'll even say that we have that authority in a certain way, from our understanding of financial markets to say, hey, look, why don't we rally together with all the exchanges in China, including also those Chinese companies that are listed in the US, to say, look, let's put together really our 500 or our 100 or whatever, including companies listed in, what is listing? Nowadays, I'll just primary list all these companies in all these different markets, right? It doesn't really matter.
Right, so hold on though. I mean, like the whole thing about representative of Hong Kong, you're right, it's neither here nor there. But ironically, you could say the same thing about where Hong Kong is right now. It's kind of neither here nor there, some would argue. It used to be pre-97, it was a proxy to access China. Now with Shanghai as a global hub, Hong Kong Shanghai Connect, you have CSI 300, 500, 1000. Most of those constituents represent the exposure that you would want from the region. The Hong Kong HSI has this really awkward beta in correlation where if US goes up, it only goes partly up, right? And it's pegged to the US dollar. If China goes up, Hong Kong only goes up 70% of that. But if either of them go down, Hong Kong goes down. So you have this strange short bias on HSI simply because it's not just not representative of any one particular region, but it has a particular sensitivity to global politics.
Sure. No, so what I'm just trying to say is, and then again, if you look at the recent development, I think there's no argument that IPO is really picking up in Hong Kong.
Yeah,
right?
It is, definitely.
And you look at all those companies, why they choose to list in Hong Kong, right? And then not to mention now, just yesterday, our FS was talking about now lobbying the central government to let more already listed company in China to come and dual list also in Hong Kong, right? And that basically paved the way of what I was talking about. One day, we have to turn the HSI into really a globally representative index for China, right? And that's the role of Hong Kong. If I'm not mistaken, Hong Kong's role is our international facing financial center, right?
Right.
That's why we do everything here. I won't even use the word competition. I don't even see any relevance of Shanghai playing any, and I think that decision has been made a long time ago. It's very, very clear.
No, it's more apparent now than ever before.
And then eventually, again, it doesn't matter. You can have 10 different exchanges, right? You look at the US, you have so many of these electronic venues that you can trade. Who cares about how many venues?
But
just
there's only one
index, right? We need our S&P. And when we have our S&P, then think about everything that comes around it. Just very simply, ETF. We've started this conversation is that my colleague was asking, why the SPDR and QQQ is so influential? And I was basically telling them, because these are the two index that is globally relevant. There's no other index but these two index, right? So we need to come out with one that is at least relevant for China. Eventually, we can even argue Asia, but that's one step at a time, right?
Steel manning the discussion here, to your point, there are ETF makers who are doing that, right? CSOP's been trying to do variations of that. Hong Kong Exchange have been trying to build indices, and they're coming up with a new Biotech futures program. So there are participants who are putting this together, but at the end of the day, it's partly marketing as well.
Of course, yeah. And there's a lot of vested interest, right? So I think it has to come from the top. It has to be an orchestrated action. And then that's always what we think. And then I think the families that we are close with are also thinking it the same way. Hong Kong should really be more proactive, especially when we come talking about
You're
financial.
talking about private sector or public?
Private sector.
Sector.
Definitely. We need to be. The private sector has to be. So it has to be a lobbying thing. So like this whole thing about the Chinese company listed in the US and now threatened to be delisted, so they should come back. And then our FS came out and said, I have already told the people to go and, talk. Look, put it into the private sector. The day when the US government make these threats, next day, there should be teams already flying all over the place in China and talking to all these companies that are listed in the US and say, hey, look, that's the proposal. I know that HKEX is doing it, but I think the same logic, we can even go one step further and say, hey, look, you know what? We want to grow, because I think the interests are aligned for everybody. We want to grow Hong Kong as a really representative center, a financial center, at least representing China, right? Look, this is the deal. let's put it all together. And then basically using the example of the US market to tell them how big of an influence that is. And that is also very relevant to what you were mentioning a little bit earlier about allocators starting to come back here and whatnot. I think until we really have a very dominant index representing a huge market cap globally, we will always be just a vacation center. When it seems like the party is quite fun, okay, let's
We'll
keep
come
going
on,
to it.
yeah,
Exactly.
we'll
And if not,
dabble.
so we can't blame to say that, oh, they are always tourists. Yeah, because you didn't offer me anything for me to stay here for good. You know, you're always as good as just a touristy spot. And that goes back to also the point about China. And that's why I'm saying that we should look beyond looking at China because they have high growth potential. It's not about that anymore.
It's about mature companies.
Exactly. It's about they being now really an integrated part of the global economy. You have to.
It's still very much, and it's quickly become similar to the U.S. where you need to be, it's a stock picker's market. You just can't buy broadly and close your eyes. You have, in fact, you have to take a value approach in some cases or a growth approach. And those were the investors who did the best last year.
Right. And then if you just use the very simplistic idea of just looking at all the global companies that are successful and looking for a Chinese version, and I bet they will come in the next 5-10 years, easily. There are still so many sectors that we don't have that, right? We just suddenly now we have a Tesla equivalent in China now, right? Suddenly we now have not really an NVIDIA equivalent, but at least an AI equivalent being, Alibaba. There are so many sectors, right? What about pharmaceutical? Actually, I talked to some healthcare fund. They were saying it's already there. The DeepSeek moment of healthcare was already there, right? It's just maybe those are not listed companies yet, or maybe it is still sort of not known to the people. Basically, the story is simple. Same technology, solve the same problem, a fraction of your price. And then I was saying, look, even from just a ESG perspective, how can not this be being very, very popular?
I was talking to a couple of managers who are rotating out of their AI book, and what they've been, the word on the street now really is about biotech pharmaceuticals, because to your point, can any Western domiciled research and development intensive company or project compete with just the mass deflationary resources of China, whether you're running through FDI 3 phases or whether you're running human, non-human trials? Few places have both the acumen and the population to support a fast development through pharmaceuticals, for example, and which is why all the big pharmas are buying IPs in stages from onshore Chinese labs, some of whom people have never heard of before. Right?
That's exactly the story. And then I think if you even look at defense, there's this joke about this fighter jets and things like that. But then that aside, if you really look into the developments there, I just saw the other day, I don't know whether that is just something created by AI or it is real deal. I saw something like, think a aircraft carrier, but not sailing on the sea. But it's like up there. It's like a big jumbo thing. And then
in the Avengers, they call it the helicarrier. It's called the helicarrier.
Exactly, something like that. And then once they sort of take down all the whatever, and it's these drones that came out from it. And then they were saying, in the future, we don't need to send any humans or just these things.
Well, it's happening right now.
They can wipe out,
I mean, the early stages of the Ukraine war was very dominated by drones. It's quite scary, actually, But now we're talking about in mass.
Exactly. And then you talk about this carrier that can basically fight. That's why aircraft carrier was very powerful, right? Because they can actually go to a remote place and then mobilize. Exactly.
Deploy massive
this one
resources.
is flying out there, and maybe they can go up to space. But I'm just thinking it is a little bit surreal to say China, and then I'm hearing it also even from our foreign friends that, wow, China is really a high-tech country now. And I was like, wow, that's just a few months ago. Why are you making this comment? They said, wow, you have this. And then it's always there. It's
Yeah, it
just
was always
nobody really go and
Pay attention.
pay attention. Now everybody is trying to go over it and take a look. Everybody is now going to Shenzhen to look at the AI thing and the autonomous driving and whatnot.
Shanghai Auto Show was a complete, it was totally packed out. It was crazy.
Yeah, going back to the topic. So that's why, because of this, that we're becoming a little bit cautious, because every day I'm having people asking me these things. Right? So next week, we are leading a delegation to Milan. There'll be 5 or 6 families from Hong Kong, and then we'll be meeting, there are around 10 families in Italy. So it's co-organized by the AWL and then also the Italian consulate here. And then turns out that also some of my old acquaintances, my mother's school, Bocconi, so they have...
That's right, you spent a lot of time actually in Europe.
So they have a professor that will be talking about sharing ideas of family offices in Italy, hosting family. Turns out it was such a coincidence. It turns out it's actually my classmates' family. And then, they will be hosting us, talking about this is a very successful industrial family, basically divesting all their industrial businesses and now turning into one of the biggest PE firm in Italy.
Wow.
It's a very common story now in Europe. A lot of these big, especially the industrial type of sort of companies, they're no longer in the main business. They sold their businesses to, first to the Germans, and then these days probably now to China at some point.
Yeah.
But then still a lot of wealth, right?
Yeah.
So a lot of them turned out to be very, very influential private equity guys, which is very good because it helps the entrepreneurship in Europe. It has always been lack of. I think Italy is a little bit better. Italy is always quite entrepreneurial. So I'm looking forward to the trip because hopefully there will be a lot of synergies and a lot of interesting sharing. Because one thing I was always sharing with everybody, and that's why I had quite a good time during my time in Italy for my graduate school and also for the earlier part of my career, is because after a while, you find out that there is a very strong similarity between the Chinese and the Italians. And that's because of our family roots.
Yeah.
So I'm very
similar family values.
Interested to see how they run their family offices. Because I suspect we will see a lot of things that are very common. One thing about Hong Kong family offices that I find it very fascinating is that they are very, very value-driven, as in family values. Most of the families in Hong Kong, they first started off as basically defining what is their family value. And then the rest is easy. Then you set KPIs, as in what you do. No matter your investment, your philanthropic work, which nowadays more turn into more like impact investing and whatnot. It's very simple. And then basically you just follow it step by step. So that's why some families are more in education, some families are more in healthcare, as I'm saying, some families are more in technology. I actually always find it very fascinating is that one of them, I'm not going to name them, they were telling people the family value is happiness. So then they set KPI with everything that they do.
What's the KPI for happiness?
Exactly. So they define, so they have their own, call it their own Michelin grading system. They grade happiness. So one of the deals they did was cleaning up garbage in space.
Right. Are these all profitable ventures?
So
and is
again,
that, I guess,
that's depending on how you fix your KPI.
Right.
What is, like you rightly asked, what is the KPI for happiness? Well, sometimes making a lot of money is actually counterintuitive, right?
Right.
So maybe helping some people, or maybe helping people to reunite with the family. I don't know, but everybody has their own little thing. But then I'm now very, very curious what the Italians are looking into. I'm sure they are looking at very similar things. So that's sort of the highlight of our trip next week. And then hopefully we can bring something back and do something together with the Italian families, either in the GBA area or actually in Europe or specifically in Italy. So,
good luck with the trip.
So we'll see.
Yeah.
We'll see.
Good
But
luck.
looking forward.